Good day Forex trader. Your USD Forex Signal, downwards consolidation to support near $1.1000. Today's your USD signals. Risk 0.75%. Trades must be taken between 8 a.m. and 5 p.m. London time today only. Short trade idea. Short entry following a bearish price action reversal on the H1 time frame immediately upon the next touch of $1.1072, $1.1089 or $1.1142. Put the stop loss 1 pip above the local swing high. Adjust the stop loss to break even once the trade is 20 pips in profit. Remove 50% of the position as profit when the price reaches 50 pips in profit and leave the remainder of the position to ride. Long trade idea. Long entry following a bullish price action reversal on the H1 time frame immediately upon the next touch of $1.1018 or $1.0956. Put the stop loss 1 pip below the local swing low. Adjust the stop loss to break even once the trade is 20 pips in profit. Remove 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to ride. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. Your USD analysis. I wrote last Monday that there was heavy technical resistance pushing the price lower, and a very strong US dollar. However, I thought that we may have seen a bullish short-term double bottom if the price could go on to get established above $1.0960. Yet I was really looking for a short trade from a bearish reversal at any resistance level. There were no good short trade setups that day, and this was not a great call as the price chopped around what I had thought to be the pivotal point at $1.0960. Yet once the price did fully clear that level, the situation turned much more bullish. Overall, this was not a great call. Risk sentiment improved towards the end of last week, with the US dollar falling out of favor after the Fed announced its 0.25% rate hike, maybe a case of buy the rumor, sell the fact. The forex market then got back into its more typical risk-on mode, which sees a weaker USD and an especially weak JPY, while other currencies such as the euro rise. This boosted the price of this currency pair. The price rise here peaked on Thursday, and since then we have seen a weekly bearish and consolidative pattern, with new closer support and resistance levels printing. This points towards lower volatility and more ranging price action. I think it is quite likely that we will see the price remain between $1.1000 and $1.1072 today, but if the price can break below the big round number at $1.1000, it would be likely to fall to $1.0955. I think the best approach here today is to wait for the price to fall to reach the zone between $1.1000 and $1.1018 and look for a long trade from a convincing bullish bounce there. I think an even better trade will set up if the price can make 2 consecutive hourly closes not far below $1.1000, providing an attractive short trade entry targeting $1.0955. Gbp Usd Forex Signal, rising wedge points to bearish breakout. While the relative strength index is rising, there is a likelihood that the pair will have a bearish breakout in the coming days. Bearish view. Sell the Gbp USD pair and set a take profit at 1.3050. Add a stop loss at 1.3250. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.3200 and a take profit at 1.3250. Add a stop loss at 1.3150. The Gbp USD pair has crawled back in the past few days as investors react to the interest rate decisions by the Bank of England, BoE, and the Federal Reserve. It is trading at 1.3178, which is slightly above last week's low of 1.3000. BoE and Fed decisions. The Fed and the BoE were in the spotlight last week as they held and concluded their monetary policy meetings. The two sessions confirmed that the market was in a new normal of higher interest rates. On Wednesday, the Federal Reserve decided to abandon its easy money policy by ending its quantitative easing policy and hiking interest rate by 0.25%. It was the first time the bank has raised rates since 2018 when it hiked 4 times. The bank's dot plot also signaled that officials were looking forward to 6 more rate hikes this year. In later statements, some officials hinted that the next rate hike could be 0.5%. If this happens, it will be the first time that the bank has raised rates by 0.5% in years. Meanwhile, the BOE also concluded its monthly meeting. The bank decided to deliver another 0.25% rate hike, which brought the headline rate to 0.75%. It has risen rates in the past 3 straight meetings and it hinted that more rate hikes are coming. A common theme between the two banks was that the labor market is tightening while inflation will continue rising. Because of the supply chain challenges, the two banks warned that rate hikes will not help to lower inflation for now. Later on Monday, Jerome Powell will deliver his first statement since the bank made that decision. He will likely provide more clarity about the economy. Meanwhile, later this week, the UK will publish important data on inflation and retail sales. Gbp Usd Forecast. The 4-hour chart shows that the Gbp Usd pair has tilted upwards in the past few days. It is trading at 1.3178, which is above the 25-day and 50-day moving averages. It has also formed a rising wedge pattern, which is usually a bearish sign. The pair has also formed what looks like a bearish flag pattern. Therefore, while the relative strength index is rising, there is a likelihood that the pair will have a bearish breakout in the coming days. If this happens, the next key support will be at 1.300. Aud Usd Forex Signal, more upside as Aussie forms V-shaped recovery. The pair will likely keep rising on Monday as bulls target the key resistance at 0.7445. Bullish view. Buy the Aud USD pair and set a take profit at 0.7445. Add a stop loss at 0.7350. Timeline, 1 day. Bearish view. Set a sell stop at 0.7350 and a take profit at 0.7300. Add a stop loss at 0.7440. The AUD USD pair rose to the highest level since March 7 as investors predicted that the Reserve Bank of Australia, RBA, will also embrace a hawkish tone in the next few months. The pair rose to a high of 0.7413, which was about 3.5% above the lowest level this month. Hawkish RBA. The AUD USD has rebounded as investors expect that the RBA will turn its market sentiment in the coming months. In its meeting earlier this month, the bank reiterated that it will only start tightening when the real inflation remained between 2% and 3%. In the same meeting, the bank said that it expects that the headline inflation will remain above 3% later this year. At the same time, the Australian jobs data published on Thursday showed that the labour market was tightening. The unemployment rate has dropped to the lowest level in years while wage growth has held steady. Therefore, while the RBA has maintained a relatively dovish stance, analysts expect that it will change its mind. Another catalyst for the AUD-USD pair is that commodity prices have held steady, meaning that demand for the Australian dollar will remain as exports rise. Meanwhile, the pair also rose despite of the hawkish statement delivered by the Federal Reserve last week. The bank decided to hike interest rates by 0.25% as most analysts were expecting. It also signaled that it will hike interest rates in all the remaining meetings of the year. If this happens, it means that this year will see the most rate hikes in years. Therefore, the pair rose because the situation was already priced in by the market. Indeed, other assets that would typically drop after the hawkish Fed like cryptocurrencies and stocks rose as well. Aud Usd Forecast. The 4-hour chart shows that the Aud Usd pair has made a strong comeback in the past few days. As a result, it has formed a V-shaped recovery and moved above the 25-day and 50-day moving averages. It is also approaching the key resistance level at 0.7443, which was the highest point on March 2022. The pair has also moved above the 25-day and 50-day moving averages while the relative strength index has pointed upwards. Therefore, the pair will likely keep rising on Monday as bulls target the key resistance at 0.7445.